The luxury watch market, especially Rolex, is facing unprecedented challenges in 2024. Despite making more watches, prices are falling while wait times stay mysteriously long. This contradiction has left many experts and enthusiasts confused, questioning how supply and demand typically work in the high-end watch industry. We'll explore the current market situation, look at specific Rolex models, and examine the various factors contributing to this market shakeup. Current market overview. The Rolex market in 2024 is full of contradictions. Rolex has significantly increased production, even setting up 4 new temporary factories to meet demand. Yet, oddly enough, wait times for popular models remain high, often stretching to 5 years or more. This mismatch between more watches being made and their continued scarcity has led to questions about how authorized dealers, the ADs, operate and the overall health of the luxury watch market. Looking at the numbers tells an interesting story. The supply of Rolex watches almost doubled in 2022, followed by a steady period in 2023. However, 2024 has seen a surprising 17% increase in available inventory since the year began. This surge in supply has predictably affected the secondary market, where prices have been steadily declining since they peaked in May 2022. We're now in the 7th quarter in a row of price drops, a trend that has shocked collectors and investors alike. The secondary market, once a place of high prices and quick profits, now tells a different story. There's been a big increase in watch inventory as second-hand dealers and individual investors rush to sell their stock. This flood of watches into the market has created a situation favorable to buyers, with many models now available for less than their retail prices. Industry experts predict further price drops in the coming months, suggesting we might not have reached the bottom of this market correction yet. Rolex model-specific analysis. To understand the nuances of this market shift, let's examine 4 specific Rolex models that illustrate different aspects of the current situation. First, we have the Rolex Explorer 36, reference 124-273, introduced in 2021. This two-tone model, combining stainless steel and yellow gold in Rolex's signature roll source style, has faced unexpectedly low sales in 2024. Despite its attractive design featuring a 36mm case, 11.5mm thickness, and the reliable caliber 3230 movement, this Explorer hasn't captured the market's imagination as anticipated. The lukewarm reception might be due to changing preferences in case sizes, with many buyers now favoring larger watches. Additionally, the two-tone look, while classic, may not align with current trends that lean towards either full steel or full precious metal models. In contrast, the Rolex Yachtmaster 42, reference 226-659, tells a different story. This white gold model on an Oysterflex bracelet has maintained a stronger market position. With its 42mm case housing the caliber 3235, it caters to the current preference for larger watches while offering a stealth wealth appeal. The retail price of around $31,000 has seen interesting market dynamics, with pre-owned models starting at approximately $26,000, while new gray market pieces command around $40,000. This price spread indicates a complex interplay of demand, perceived value, and market speculation. The Rolex Day Date 40, reference 228-239, in white gold presents yet another market scenario. This model, with its 40mm case, 12mm thickness, and powered by the caliber 3255, has shown relatively stable prices. The retail price of $40,800 is closely matched by the secondary market, with pre-owned pieces starting around $37,000 and new gray market offerings at about $39,000. This stability suggests a sustained demand for the Day Date, possibly due to its status as a flagship Rolex model and its appeal to a specific segment of luxury watch buyers who value its prestige and understated elegance. Lastly, we have the Rolex Submariner Date, reference 126-619LB, in white gold with a blue bezel. This model exemplifies the most dramatic price shifts in the current market. Despite a retail price of $41,200, pre-owned models can be found starting at around $31,000, with new gray market pieces available from approximately $35,000. This significant price drop indicates an oversupply in the market, possibly made worse by the model's specific combination of white gold and blue bezel, which might limit its appeal compared to more traditional Submariner variants. Market factors analysis. Several key factors are driving the current state of the Rolex market. First and foremost is the issue of production and supply. Rolex's increased production capacity has led to a level of market saturation previously unseen in the brand's history. This abundance of watches contradicts the narrative of scarcity long maintained by ADs, creating a cognitive dissonance for buyers who have been conditioned to expect long wait times and limited availability. Economic factors play a crucial role as well. Global economic uncertainty has made buyers more cautious, particularly in the luxury goods sector. Rolex watches, often seen as investment pieces, are now being scrutinized more carefully in terms of their value retention. Currency fluctuations have also impacted pricing and demand in different markets, adding another layer of complexity to the global Rolex market. Consumer behavior has shifted significantly. There's a growing trend towards more value-oriented purchasing decisions, even in the luxury segment. Many buyers are exploring alternative luxury watch brands, expanding their horizons beyond Rolex. This shift is partly driven by frustration with AD practices, leading more consumers to explore the secondary market despite the risks involved. The issue of market saturation cannot be overstated. The flood of Rolex models in both primary and secondary markets has led to price drops, particularly noticeable in previously high-demand models. This saturation may represent a market correction after years of inflated prices, bringing valuations more in line with intrinsic value rather than speculative hype. Distribution strategies, particularly those of ADs, have come under intense scrutiny. The lack of transparency in waitlist management and allocation practices has eroded consumer trust. There's a growing disconnect between Rolex's official pricing and market realities, putting ADs in a difficult position as they try to maintain brand exclusivity while dealing with the realities of increased supply. The investment perspective on Rolex watches has also evolved. Once seen as surefire appreciating assets, many Rolex models are now facing the reality of potential depreciation. This has led to a shift from speculative buying to purchases driven by genuine enthusiasm for the brand and its products. Deep dive: the AD game. The role of authorized dealers in the current market turmoil cannot be overstated. Despite the increased supply from Rolex, waitlists for popular models remain long, creating a paradox that has many questioning the practices of ADs. There's speculation about artificial scarcity being maintained to preserve brand exclusivity, but this strategy is becoming increasingly difficult to justify in the face of market realities. The impact of the gray market on AD operations is significant. With gray market prices approaching or even falling below retail for some models, ADs are finding it challenging to justify premiums on hard-to-get models. This situation risks eroding consumer trust in official distribution channels and could potentially lead to a restructuring of the traditional AD model. The business model of ADs is under strain, caught between the need for short-term profit maximization and the importance of maintaining long-term brand loyalty. The competition from the gray market is squeezing profit margins, putting pressure on ADs to reevaluate their strategies. Rolex's level of control over AD practices and the potential for reform in this area will be crucial in shaping the future of Rolex distribution. As we look to the future, several key predictions emerge. We can expect continued price adjustments in the secondary market as it seeks equilibrium. Rolex may need to revise its retail pricing strategies to align more closely with market realities. There's likely to be a push for increased transparency in the distribution process, possibly including reforms in AD policies and waitlist management. The product line itself may evolve, with potential introductions of new models or complications to reignite market interest. Rolex will need to carefully navigate its market positioning to maintain its luxury status amidst increased availability. This might include more limited editions or region-specific models to create new sources of exclusivity. Finally, the competitive landscape of the luxury watch market is likely to shift. Other brands may capitalize on Rolex's challenges, potentially leading to market share shifts within the luxury watch segment. The long-term impact on Rolex's brand positioning and perceived value will be a critical factor to watch in the coming years. In the end, the Rolex market in 2024 is at a crossroads, facing challenges that will redefine its place in the luxury watch industry. As supply and demand dynamics continue to evolve, Both Rolex and its customers will need to adapt to a new reality in the world of high-end timepieces. To stay informed about the latest developments in the Rolex market and the luxury watch industry as a whole, subscribe to Luxury Focus. Our channel provides in-depth analysis, expert opinions, and timely updates to help you make informed decisions in the ever-changing world of high-end timepieces. Don't miss out on our upcoming discussions on market trends, new releases, and investment opportunities in the luxury watch sector.